Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 13th of February 2020. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff, but a few interesting setups, of course. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, now then, just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, guys, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, and it will take you to this page which you may find useful. Right. Now then, let's jump into the charts. Now the first one on the chart here is the FTSE 100. Now a quick update on this. I talked about this one, or I should say I keep talking about this one from the beginning of this week, and basically what I was mentioning yesterday, that given the fact that it managed to break this downside line, there is a possibility for this one to push further north, but ideally we would like to see a push above the 7,533 territory, or even better, the 7,550 zone. So we did get a push higher, we did get a test of this 7,550 area. Well, almost, if I'm not mistaken, yes, almost managed to reach that area, and then quickly reversed back to the downside. So again, for now, guys, be very careful looking at the cash index right now. We can see that the price is sliding back down here a little bit, so it's basically now near the 7,500 mark. So basically be very careful. It's again back to this downside line. The only thing is now it's testing it from above. If it holds, we could see a nice rebound and a push higher, but still we will remain careful and cautious, and we'll wait for that push above the 7,550 territory that I've mentioned previously. And in order to get comfortable with the upside, and in order to get comfortable with this potential idea of an inverted head and shoulders pattern, because if it starts dropping below the 7,499 area and below this downside line, well, to be honest, we'll be very careful and cautious, because in a way all this we could start scrapping it, and we'll keep an eye on some of these lower levels. But for now, until it's still above the this downside line, and as I said, the cash index is on a little slide right now, but this could still be seen as a temporary correction before another leg of buying. So that's why let's the bears should not get their hopes up yet. First, let's see if this will manage to drop below the 7,499 and below this downside line. So let's keep an eye on that one. And as I said, with the upside 7,550, that's the level we're looking at for the upside. Now jumping into another interesting index, which I don't look at very often, but still it presents itself with some nice interesting opportunities. Now this is the CAC 40, now the French index. So yesterday it got a hold up near, and let me just quickly put this one on the chart. Yesterday it got a hold up near this high, the highest point of January, near the 6,110 territory, roughly around here. So if we look at the cash index right now, I mean, we can see that there is a bit of a correction here towards the 6,080 85 zone, so roughly around here. In order for us, let's say, to examine the upside, well, as you probably understand now, we need to see a nice good clear push, and ideally maybe a daily close above this barrier here, above the 6,110 zone. If we don't see that, then, well, again, we could see a false breakout, which would still not be very good for the buyers. But For now, like I said, keep your eyes on this barrier. This is the one to watch for the upside. If we get a nice daily close above this, then yep, we will aim for higher levels. In case of the downside, now we will start considering lower levels if we get a drop below this little area. Excuse me, near the 6,050-51 zone, which is the high of the 6th of February. In a way, this could lead towards further declines, but to be honest, to get a little bit more excited with lower areas, a drop below the 5,994 zone could do the trick here, because this would also place, of course, the price below the psychological 6,000 mark, and well, I mean, more sellers could be joining in and driving this one lower. So again, for now, even though we are seeing a bit of a excuse me, a bit of a correction to the down, well, a bit of a move to the downside, this still could be seen as a temporary correction before another leg of buying. But as I said, we need to see a nice, good, clear close above the 6,110 zone before examining, or should I say, before getting comfortable with higher levels. So keep your eyes on that one. Now then, gold. I haven't looked at this one for quite a while, and for obvious reasons, because to be honest, it's not really doing much. It's just kind of balancing in between these two lines. So the short-term tentative upside support line taken from the low the 12th of December, so, and below the another short-term tentative downside line taken from the high of the 7th of January. So basically, in other words, it's kind of coiling up, I would say, not in a very ideal shaped triangle, but nevertheless, for now we'll take it. And as I've mentioned previously in one of my videos where I've discussed gold, in order to get comfortable with the downside, these are the two levels that we're watching for, a break of which could lead to a further directional move. Now, that said, of course, if we're looking for something short term, in terms of the downside, if we get a drop below this level right here, the 1561 territory, then in a way this also, of course, would place the price below the this upside support line and increase the commodity's chances to drift a little bit lower. But still, the 1547, that's what we're looking at here, in order to aim for lower levels, a break after which we could start considering further declines. Again, like I said, for now, we're very careful in this one, and probably more neutral than anything else. Now then, Ripple. So, crypto world. The crypto world is exploding to the upside right now. So let me just actually clear up this chart a little bit, because we have looked at this one a while ago, and since then a lot has happened. So basically, the fact that this week we're seeing a nice burst here to the upside. So basically, traveling from the low of February, which was around here near the 0.2680, it traveled to the upside and managed to find some resistance today near this little territory right here. Let me just put this one on the chart. So in a way, that's and let me just quickly measure this, guys, just for our future reference. Where's that measurement? So there we go. So it managed to travel from here all the way to this little territory here, and this basically in a week's time, that's around 25% gain. So look at the spectacular performance here. So basically, it does show that the crypto world is still not dead, and there is still a lot happening in there. But of course, it's a little bit tricky as always. I mean, this is the one to be very careful about. But coming back to the technical analysis here, so overall, of course, we can see that there's a bunch of upside lines, a bunch of tentative upside lines that we could draw, which show the direction here. So basically, one is around here, the other one is basically taken from this low here, taken from the low of January, and of course, as the further we go, the steeper the lines get. So basically, that's why we're gonna just focus basically on some key support and resistance levels for now. So in a way, all this kind of really just all a little bit tentative, I would say. But the most important thing to watch here, of course, is this high, the high of the September 2019. So let me just mark this on the chart. So you can see that this morning we had an overshoot of that territory near the 0.3880 zone. We did get an overshoot, but the crypto managed to is it here or is it a little bit lower? Let me just, there we go. So that's around the 0.3277 zone. So there we go. So the crypto managed to overshoot it, and but the bears quickly pushed the price back below it. So in a way, this is going to be a very important level to watch. Although, yes, we did reach the 0.3349 territory this morning. This is going to be the barrier for us to after which we could consider more upside. So in a way, a break above this would confirm a forthcoming higher high, and yep, we could target slightly higher levels. But for now, for today, probably keep your eyes on this 0.3277 zone, because if we do get a daily close below this area, then, well, I mean, given that we already had a steep uprise, we may see a bit of correction to the downside. So again, guys, that's for now. That's I'm just going from the thing that I'm seeing right now, because again, don't get me wrong, by the end of the day we could still pop even higher. So that's why for now this is just an idea for you to consider, keep in mind. So if we get a nice good close below the 0.3277, then, well, I mean, this could potentially lead to a test of the 23.6% retracement under Fibonacci, and basically then that's roughly around the 0.3190 zone. So something to keep an eye on, guys. Of course, don't get me wrong, lower levels are attractive as well a little bit, but we'll keep it short and simple, because given the steep uprise, I mean, given the current interest in the crypto, this might continue further north. But again, for now, at this point in time, for us to consider the upside, we need to see a push above the 0.3349 zone in order to aim for higher levels. In terms of the downside, well, I mean, for now we're keeping the downside off the table unless it's a temporary correction. Jumping into a few pairs now very quickly. AUDCHF. Now, I've looked at this one recently, and basically, given the fact that we managed to break this downside resistance line taken from the high of the 1st of January, this, of course, the pair moved higher here and continues to balance above it. So basically, let's get rid of this line, because this got violated a few times now. So mainly, we're going to focus on this pattern here. So for now, after it reversed on the 2nd of January to the upside, it traveled higher. The pair is now currently getting held here by this 0.6591 zone. You can see how well this is playing out. So basically, this is going to be the barrier for us to watch. If we get a nice push above it, then yep, we will aim for the next potential area of resistance near the 0.6614 mark. That's the low of the 7th of January, and also coincides with the 200 EMA on the 4-hour chart. So basically, this is where another holdup may occur. But to be honest, if this is seen as just a temporary obstacle for the bulls, then yep, we could see this one traveling higher again. Similarly, like with the FTSE, we could be getting ourselves here an interesting inverted head and shoulders pattern. So let me just quickly put this one on the chart. No, didn't catch it. But anyway, well, let me just adjust it after that. So there we go. There we go. Then that's the right shoulder right here, and yep, finishing it off here. So basically, long story short, guys, this is something to watch for yourselves here. Now, again, you could draw it this way. You could potentially maybe draw it a little bit here, and for now, basically, that doesn't change the game. For now, we could consider this as a potential inverted head and shoulders pattern, but of course, we would need to see a nice good break through this key area of resistance first. So basically, this is where these two levels that I was talking about come in. So initially, we'll start considering the upside if we get a push above the 0.6591, but then we'll aim for the 0.6614, a break of which could could lead towards higher levels, and this pattern could be confirmed. In case this suddenly drops lower and pushes below the 0.6491 zone, we'll excuse me, we'll scrap the whole idea and aim for the downside. So for now, keep monitoring this scenario, potential scenario, of course. GBPNZD. I talked about this one yesterday, and basically I was telling you guys to keep a close eye on this little territory right here. We got a close move, a move closer to that area towards the 1.9989, but as you can see, the rate rebounded and pushed slightly to the upside. That said, of course, this doesn't mean that from here it will start moving higher. For us to get comfortable with the upside, well, as I've mentioned previously, we need to see a push above the 2.0257 zone before examining higher levels, because this would confirm a forthcoming higher high here, and push above the high of the 11th of February and push above the highest point of this week. So the current highest point of this week, of course. But as I said, this is the barrier for us to watch the upside. For now, it's closer to a downside scenario where it's closer to this key area of support near the 1.9989, a break of which could lead this one towards this medium-term upside support line taken from the low of the lowest point of July last year. So something to consider, guys. For now, keep your eyes on this one. Let me just put an arrow here for our future reference, and basically that's what we're going to be looking out for now. EURUSD, the last one for this session. Of course, this is working out perfectly with the way I've mentioned it on in my videos this week. Basically what I was saying yesterday, especially in my traders tea time, given the fact that the pair got a hold up near this steep downside line, it kind of increased its chances for a drift further south. But what I was saying, that in order to aim for lower levels, ideally we would like to see a drop below this 1.0890 zone, which was the low of 11th of February, because this way the pair would confirm a forthcoming lower low, and we could aim for this lowest point of October, or in other words, the lowest point of 2019. So which we managed to overcome easily. And now what we're going to do here is we're going to keep an eye on this new low that was created, and that was near the 1.0863 zone, roughly around there. In a way, don't get me wrong, for now we could see a bit of a corrective move here, maybe to the upside, but still the same game plan remains. As long as the rate stays below this steep downside line, we will continue targeting the downside in the near term, especially if it drops below this current low near the 1.0863 zone, because this way the pair would confirm a forthcoming lower low, and further declines could be possible. We're still not going to drag this one too much to the downside. Looking at today's pivots, we may target the S1 roughly around the 1.0848, or the S2, which is roughly around the 1.0827. So keep your eyes on that one. In terms of the upside, pretty straightforward. We need to see a nice good push above the 1.0925 zone before we could consider a larger move to the upside here. But again, don't get me wrong, still overall we are trading below this downside line taken from the high of the 31st of December. So any kind of move higher could still be seen as a temporary correction before another leg of selling. But again, we do have a lot of space here, so let's take advantage of all this and try to maybe capture a nice swing back to the upside here. Only if we get a break above the 1.0925, because that's the level from which we will get a little bit more comfortable. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on in my traders tea time, as always, 14:15 GMT, we'll have a look at some of these instruments, see how they performed, and of course some new ones, and we'll take it from there. Thank you very much, guys, and have a nice day. Bye bye.